The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen, and good morning to our friends in Australia who live in the deep north, and good afternoon to the rest of you and our friends in New Zealand. Nice to have you with us. Terry, nice to have you with us. How's the sound? Here he is. Audio is good. Thank you. Great to have. Terry's runs support for us in Canada. Does a great job. Thank you, David. That's all good. We've got sound. And terrific to have your company today. Hey, miserable old day at the Gold Coast in Queensland today. It's the start of summer. We've had the most sensational electrical storms and some heavy rainfall with it. We've had day after day of storms, and boy, we certainly needed the rain. It's been terribly dry here, but anyway, it's good to have. It'll all clear up tomorrow. And Marvino, thank you. Greetings to you, my friend. So, Cal. Okay, Southern California, I guess. What's Terry got to say? Oh, 3 centimeters of snow with whiteouts where Terry lives in the south of Canada. Chatham, I think it is. Not far from Detroit. 3 centimeters of snow with whiteouts. Wow. All right. Happier to be where I am, actually. Thank you. Okay, so let's see. We should be, you can all see my screen. And today we're going to talk about, I've got a few people here to say hello to. Just bear with me for a moment. I do apologize. Ahmed, Albert, haven't seen you for a while, Albert. Alex Shkaroop, I've been with us a long time, haven't seen him for a while. Boyd Yarn, he's my mate up in Canterbury, even worse where you are, Boyd, he's up in the far north. Bram, you're a new one, nice to have you with us. Also, Carlo, Chase. Chase is my conscience about smoking cigarettes. He's nagging me to give them up, and he's quite right. Daryl over in Mossman, good to see you, Daryl, with us. Webby, the king of the black lines, he's... this is from Boyd up in northern Canada. Minus 24 here, John, plus the wind. Okay, Eric T, my mate. He's a retired Emirates pilot, very dashing character. His wife's gorgeous. Up in Dubai. Nice to have you with us, Eric. He's done a tutorial recently. Gary. Harold Foose, my mate over in Redding, California. Hugh Sinclair, good to have you with us. Janet, hello. 2 Janets. We've got 2 Janets today. Always got to say hello to the ladies because we don't have a lot of them, and it's lovely to have them. Johnny Barnes, he's made up in Canberra. He's done a tutorial. Justin Woolley down in the Hunter Valley of New South Wales. He's a tutorial guy. Got a few of these here. Lloyd, Mark Lutz, he's doing a tutorial in the middle of it now. Nice to have you with us. Marshall, Marty, Marvino, Marilyn. Yes, lovely to have you. Mike, our gun trader up in Chicago. Mike, the demon dentist, he's a super trader. He did a tutorial up in LA with us 2015. Gosh, time runs away, doesn't it, when you're having fun. Mike Murphy, he's just done a tutorial. They need to follow you up, Mike. Mr. Dex with us. Oh, Lord, so many people here. Nice to have you all with us. Norbert, good to have you here. Peter, Keller, Philip, Rodney, Scott, Lancaster over in Wellington. Scotty's been with us a long time. Steve Casterly. Steve, I've got to get in touch with you. I asked Terry to let you know. I'm going to give you a refresher, mate. Steve's done he works up in the far, far north of Alaska in the oil fields. He's done a tutorial. Needs a bit of a freshen up rather. Sue Lee up in North Queensland in the middle of doing a tutorial. Good to have you here. Sue, Terry Roberts, another one that needs a follow-up. He's done a tutorial, needs a bit of a follow-up there. Tom, my mate, the broker down in Florida. They've been having some fun trading the Daniel Code. Tom's with a boutique advisory firm there in New York, although Tom himself represents the firm in Florida. Tom's an old-time commodity trainer, very switched-on guy. And the Trevor's, good to have you all here. Lloyd, check the Simon Fraser swim team playing in the snow in their speedos. You being an old speedo forever dude, you're right, mate. I've still got my speedos. How life has changed, when we were young men, and I mean we lived at the beach, and I went through university on a swimming scholarship, and I've worn speedos all my life. But now the kids, they look at your speedo and say, "Oh, Dad." So I guess. There's a bit of a veranda over the speedos now. I've put on a fair bit of weight since I stopped sailing, Lloyd. So I guess it's I don't know if it's an affront to the eyes, but the young people get affronted by nearly everything these days, don't they? But that's all right. Okay, so I've called this tutorial Consensus Conundrum, and what's Pete say? Oh, budgie smugglers. Yeah, mate, all the time, never changed, still wearing them, and I'm older than most of you blokes. Yes, the world's offended by everything these days, and that's tough. I've called this Consensus Conundrum because, I love this stuff. This happened. Those of you who've been with us a long time will remember this happened a couple of years ago. We came out with a forecast for the year, and a week later Goldman Sachs came out and nailed the same number virtually. So they followed us in again here, which I think is terrific. Flattery, imitation is flattery. However, there's too many of them all loading up onto the same numbers. And I told you these numbers at our last tutorial, which was 2 weeks ago. And said the next big number for the S&P is up around 2,400. Since then, Goldman Sachs came out with, a week after that, they came out with this huge analysis. I think I've got it here. I can just show you really quickly before we move into the other stuff. Here we are. This is from Zero Hedge, a very terrifically amusing website. But here's Goldman's note. This is 30th November. This is a week after I told you the numbers. And they've got all of these details about hope from Trump being in there. They talk about S&P is going to climb to 2,400. They go through all these headings: money flow, earnings, which of course, frankly, are BS because you can't. I hear you and can curse screen. David, you're saying it's all right. You can see everything. There are no problems with the screen, Terry, are there? Earnings are, pretty rubbery because the non-GAAP, everything's good. You can see that's good, Dave. The non-GAAP, generally accepted accounting standards that they use is pretty shonky. You take public company accounts with a large pinch of salt. Inflation, valuation, path and target, they go on and on about this, buybacks and dividends. All the offshore money that might be coming back, then we get into their charts. They go into enormous detail about all of this stuff. And at the end of all that, they come up with 2,400. A few days after that, we've got a note from Evercore ISI, who've gone ahead and Tony D, good to have you with us, mate, from Chicago. Yeah, cold and windy, I bet it is. You can always move down to Australia, Tony, or even New Zealand, better still. So this is Evercore ICI, and they've done an institutional investor survey. This is now, we're up to 2.5, 3 weeks almost since I told you, 2 weeks anyway, since I told you all what the number was going to be for nothing. You have to pay to get these reports. My stuff's free for all of you. And then they go through their institutional survey, and they come up with the startling answer that they've got a target of 24, 25. In Evercore, that's actually their Facebook feed, but there's a whole lot of math behind that. But as I delight in telling you, it's all in the charts anyway. If you can read charts, you'll see it all there. Quick note to you, those who are thinking of doing a tutorial. We didn't do the Waiheke Island, New Zealand tutorial this December because almost all the people who planned on coming preferred to do the video tutorial for various reasons. And I've told you before that we were doing that and it was going to end on December the 9th. We've just got so many people running over, including some of our very good clients who've done it before. Janet's doing a refresher. Mike O, Big Mike, you remember Janet, who was at Los Angeles with us at the early part of this year in May. He's doing a refresher as well, and some of these people weren't able to fit into the time frame I'd originally set, and I can't say no to our good clients. So I've extended this video tutorial through until December the 23rd. So we'll keep these going, and we can take 2 more. We have some time constraints because given the daylight, days and nights between US and Australia. If you're from Australia, we can do it any time, any afternoon. Same for New Zealand. If you're in the US, we can start doing them from 4:30 Eastern Time, PM, which is early in the morning for me. But those of you on the West Coast, we can go later. So we can take 2 more, possibly 3. Shoot me an email straight away if you're interested, please. jneedham@thedanielcode.com, and I will send you a copy of the syllabus and how it all works. And I often get a lot of inquiries when I talk about this, and then it doesn't follow up because mainly because it's quite expensive. It's my fee is $7,500 US. So just to let you know. Okay, so those of you who want to do a tutorial, there's a bit more time left to do it. Shoot me an email straight away, and we can get the bulk of your training done, the first 4 2-hour sessions before Christmas, and then after Christmas, of course, we have our follow-up. The thing about doing a Daniel Code tutorial, we don't just leave you after the teaching. We have follow-up sessions where we go over anything that needs restating or enhancing. And I also look at your trading with particular reference on any losing trades. You don't actually learn that much from winning trades, but you learn a whole lot from your losing trades. And we ask whether, there's another way of looking at it, whether there was another option for whatever signal you took. Sometimes, of course, you can be right and lose money. You can have a valid signal and the market just doesn't move far enough away to give you a profitable exit. That happens, and that's not a problem as long as you're right all the time. Then the only way you're ever going to lose money trading, once you know the Daniel Code system, is if you get into a long consolidation. And that doesn't happen because we trade more than one market, and we have very precise tools to tell you when that's happening. So let me know, jneedham@thedanielcode.com. Be happy to fit you in the last teaching sessions for the year. This is gold. Been a lot of comment from gold. This is the 4th seal on gold. Main thing is that 2 weeks ago, I showed you the 4th seal on gold and told you the trend was down, and the trend remained down. So those of you who've been trying to buy gold or get excited about buy signals, you're on the wrong side of the trade. That may change soon, but right now the trend is still down in gold. Here's just the chart to show you. 2 weeks ago, I showed you the high part of this chart, which is pretty well off the map now. 1, 2, 3, 4, 5. I might have just seen the end of it. The trend was down, so it just kept weakening down there. Now, a whole lot of the gold price is being driven by the US dollar. I wrote an article about this some years ago. If you're diligent enough, you can find it under the articles tab on the Daniel Code website. And gold and the US dollar have an in-out relationship. There are times when they move together, and there are other times when they are inverse. In other words, dollar strength is gold weakness. and that's the situation we've been in for quite a while now. In fact, the US dollar's dominating a whole lot of things and causing fair amounts of turmoil in the currency markets, in the forex pairs, because I think everyone's trying to second guess the dollar. But that'll steady down soon. The great euphoria we've had of Donald Trump being elected, business loves it, markets are skyrocketing, and lots of comment about that. But the reality is that's not actually so different. Let me just see if your screen has changed. Here it is. Yes, it has. That's not so different. Reagan got a 6% jump in the equities. This sort of honeymoon period for newly elected presidents is quite common, but this is very pronounced with Trump and energy in particular. I mean, the things they're talking about is reduced regulation, opening up energy, but this reduced regulation is the big thing for many companies. There are certainly plans for huge infrastructure build-outs. Steel companies are getting excited about it. Lots of cause for enthusiasm now. Whether that actually translates or not, we don't know. At the moment, Congress, Senate, everyone's excited about GOP winning the presidency. Trump certainly fired up people's imaginations as a businessman. He's great reputation for getting things done on budget, on time. The question's going to be, as we move away from the honeymoon period, whether Congress is going to play ball. Politicians have their own agendas. Most of them are arrogant SOBs. They're going along with the tide at the moment, but whether there's actually the money available for these infrastructure projects, we'll just have to see. Obama's certainly done his best to stymie that. He's added more to the US national debt than all the presidents in recent history before him. Just 8 years of Obama have been a fiscal disaster for America, and no one seems to be willing to say that. Okay, moving on to the gold chart. For you gold bugs, one of the things that you learn at tutorials are these alternate trend signals, which we call staircases and waterfalls. You folks who are with us here today know about these, those of you who've done a tutorial recently, and they're an alternate form of trend signal. They don't have to happen all the time. We have other ways of determining trend very quickly. And the secret to knowing trend is if you know the trend before anyone else, you can trade accordingly. But starting back in May 2016, you'll see this market was moving the way markets normally do. A staircase. I don't know if Sage is with us today, but she named the up moves the staircases, and I call the down moves the waterfalls. And these are directional trend signals that tend to give us bigger moves than normal. Now, notice I use the word trend. Anything to do with trading, we're dealing with probabilities. There are no certainties. Sometimes I get really excited and say always or never, but they're not words that you should actually use in regard to trading. Chase is going to scold me in a moment. But these signals tend to give us, they tend to be stronger. And you can see from May 16, moving up the way this has worked. You've had a staircase, waterfall, staircase. The moonbeam at the top of the chart was a sell, but it's a stronger form of trend signal. Down into a staircase, up into a waterfall, down into a staircase, up into a waterfall in September. Now, that's all normal. That's how markets normally move. But look what's happened since then. We had a little pullback, a rally, a big runoff, a long consolidation. Forget about the big grey spiky bar with the last waterfall signal on it. That's the day of the election, when a lot of markets went temporarily nuts. But you've got a succession of 3 waterfall signals in there without a staircase. That's what's happened to gold. It's just been overwhelmed by sell signals one after the other now. We're near the end. You can see the little R for rollover at the bottom of the chart in the right-hand corner. That tells us we've had a contract rollover. They are prime times for a change in trend. So don't be surprised if this thing starts to rally. We'll certainly just follow the daily signals. With all this stuff, it's follow the daily signals on the TO3 or TO3 plus, and we'll get you in the trade, whichever way it's going. Moving on now, because we're going to talk at length about the equities today and what they're going to do next year. So before we get to that stage, let's see what they're doing this year. We've now been able to update this last big movement has allowed us to update the Daniel Code trading channel on the 6-day chart. And you can see that we're still holding this important 2011 low, and we're still holding the March-April low. Now what you can see is this market has just about retraced the median. The median's the stronger blue line through the middle of that. Now, it actually doesn't go that far, but I've added it to show you exactly where it is. This market has regained the median. Now, that's the first thing it always tries to do after a break. So we're back to the median now, and the upper levels are showing us the next level of targets. This is the same chart. It should have changed for you now. This is the close-only chart. Those of you who are really obsessive about trading, like me, it's worth keeping a close-only chart. You do see things on a close-only chart that you don't see on other charts. And this is the same chart, but a close-only. And you can see how, despite us holding the 2011 June-July push down on the open, high, low, close bars, we're not holding it on the close-only chart, but we are holding the more recent pullback, the March-April, October-November pullback. We're showing that absolutely perfectly there. You remember we actually had a close below the 2 standard deviations from the mean, and I told you the highest probability was for a big, long sideways consolidation. Now, I'm fully aware that this market's making new highs, but if you look at this chart on the angle, which is how we tend to look at charts, you can see that, in fact, that's what it's doing. It's had a big, long consolidation, but it's got itself back to the mean when you're looking on the angle. This is either good potential for a failure point and potential for a launching point. So it's a time to really have your antennae up about these equity markets. This is the, see if this has changed for you. It has now. This is our long-term trend chart. This is the 24-day chart. And every bar on this chart is 24 days. In other words, it's the Daniel Code version of a monthly chart. 22 days average trading days in most months. So this is something akin to a monthly chart. This is the chart I showed you 2 weeks ago. When we were trying to break through 2130, I said at the time that this next target up was a long, long way away, and we actually looked at the top number there, 2482, but we have a number before that at 2393. Now, I just caution you, these are not Daniel Code blue lines. This is a very simple, very basic way of extending ranges. There's a tool in Trade Navigator and all software trading programs that you can use. All it's doing is it's taking previous ranges and it's extending them. It's matching that range by 1, 1.5, 2, 2.5, 3, etc. This market has for a long time been approximately reaching these levels. As I say, these are not the Daniel Code blue lines. They're something different entirely, and they are very, very, very accurate, much more accurate than this. But, you know, this is not bad when you see here, if you can see my cursor, if you can't, sing out and I'll use the highlight bar. They probably can't bearish divergence on your stochastic. Well, I wouldn't worry too much about that, mate. The stochastics are a very old-fashioned tool, Peter. They do a job, but not much when you get to these sorts of time cycles. As you can see, this stochastic's been continuously overbought from October 2012 to April 2015. So, as the saying goes, the market can stay overbought a lot longer than you can stay solvent. So, don't worry about that. We have much better ways of finding divergence there. Okay, so let's. But hey, thank you for the comment. Keep talking to me, mate. I'd love to have input from all of you. So anyway, we can see that this bar here. I'll just get my tool, which is called the Spotlight. So this bar here, it found the 2130 number with a high degree of accuracy, and 2 bars earlier, it found the 2116 number with a high degree of accuracy. And then just to make sure, the bar after closed nearly on that 2130 number. So these numbers have proved themselves as valid support and resistance, and the next levels up are 2393 and 2482. And that's you heard that first here 2 weeks ago, and everyone else has been jumping on the bandwagon since then. And that scares me because I hate it when the world agrees with me. But look where this is going. Now remember that these markets, the settings on these Daniel Code trading channels change with the charts. You've been looking at a 6-day chart. This is a 24-day chart, and the median is up here. So it's still got a way to go to get to the median. But they're the interim targets at the moment. Are they going to get there? Well, we'll find out really soon what these markets are going to do. Let's move on and see the next chart here. This is Frank's fourth seal analysis. Frank DB is a young man from Belgium, a charming guy, lovely young fellow. He's a farmer, and he came to a tutorial in Taupo some years ago. He just got married to the lovely Anne, who he brought with him, beautiful lady, and he'd never seen a chart before he came to me. And he did the tutorial, and he got particularly interested in the fourth seal and the forecasting, and now he runs that area of the website for me. Frank does all the work on the fourth seal, and he's making a very important point here, that there's a 59 cycle on the 24-day chart, which we call the death cycle or the crash cycle. Now, it hasn't really been talked about because I've mainly used it on the 6-day charts, but Frank's alerting you there that it's on the 24-day charts, and we're going to take a look at that and see exactly what it means. These are the blue lines as opposed to those extensions. These are actual Daniel Code blue lines that you're seeing now. Let's find our cursor again so I can explain to you what we're looking for here. This is the 2009 low. This is the S&P. This is the futures contract. This was our first number here at 1219. You can see the market hit this and turned away. That's target recognition. Then it went up, it hit this next number, 1384, and turned away. Next number up, 1661. It closed on that bar. Now, this is a 24-day chart. So where markets close, remember target recognition is valid on the bar, high, low, or on the close. This market closed there and then turned down for the next month. That's target recognition. Next one along, this market just stopped, it bumped its head at 1773 and stopped. All of this is telling us that these numbers are valid. And once we have sequences of Daniel Code numbers that are valid, we expect them to go on being valid. You can see here this big rally for last month. This is the presidential rally, stopped exactly at 2215. The next number up is 2327 followed by 2492. Okay, so just bear that in mind. I caution you that 24-day charts, 12-day charts, 6-day charts are not perfect for price levels. The best price levels come off the daily charts, which I publish for you. But to give you more of a sort of a global view, an overview, these are pretty handy, and I'm actually going to show you how you can have some fun creating these yourself. This is the 12-day chart, and pretty interesting. Same sort of thing. We were on the 24-day chart just now. We've gone down to the 12-day chart. This is the index. Same sort of thing. These are Daniel Code price levels on the 12-day chart. You can see right early here, 2010. Perfect target recognition at 1220 on the first push out. Then we went up and had a bit of a stutter around 1870, but it pretty well ignored it. Then it punched through to the 2115 number. It kept running away from that. It pushed through it, ran back, just hung around there for 1, 2, 3, 4, 5, about 12, 13, 12-day periods. That's about 6 months. And then it pulled back, and now it recognized the 1870 line from the other side. First on the pullback, then the rally back up to 2115, and then the next push down, it actually had a nice bar in there that closed at 1870, and the inside bar opened at 1870. So there's all sorts of stuff here saying the market's recognizing these numbers. Then we get the next push up, which is up into this little bar here, which is August, I guess, August, September. Again, we've got target recognition of the 2178, and then the little breakout here in the last bar that's completed is this minor bar here, stops exactly at 2216. So these sequences have worked in the past, and once markets lock onto these sequences, they tend to follow them and hold them for quite long periods of time. So just trying to make you aware of where we are with a larger view of the S&P. This question of 59 being the death cycle or the crash cycle, this is a great example of it. This is the 2007 high to the 2009 low in the S&P, and this is the index. This is the S&P 500 index. In other words, this is the index for the big S&P, which is the most accurate of them all. And you can see, I'll get my cursor up because this, you need to follow this, folks. If you don't follow it, just bang me a note in a question, type into question, I'll see it. So we start here. There's a little minor high in here that's hard to see, but high to high into this is the closing high of the 2007 rally was 59. And 59 is one of the most important Daniel Code ratios. For those of you who've done a Daniel Code tutorial, you'll understand. For those of you who don't, go and click on the Articles tab at the Daniel Code website and go down to, there's an audio recording there that's all about the Daniel Code. And you can listen to it. It's quite long. It's actually a recording I made in perhaps Colorado Springs some years ago. But that part, the Daniel Code, never changes. That's how we get the basic ratios in the Daniel Code, which are so amazing. So from that high in 2006 to the major high, the closing high in 2007 was 59 6-day cycles. The 6-day cycles are the basic timing cycle for the Daniel code. 6 is the vibration of all markets. Gann said, if you are worthy, I will tell you the number to be worthy. You had to hand over a lot of money, equivalent to a couple of new Buicks. And then he told you the number was 7, which is wrong. The basic vibration for all markets is 6, as those of you who are doing tutorials are seeing all the time. So we had 59 into the cycle high in 2007. So once we've seen these cycles work, we look for them to repeat. We say this cycle's validated itself once, we expect it to work again. So 59 to the cycle high, we expect it to repeat because this here at the top, this is from the book of Daniel, where all this stuff comes from, why it's called Daniel's Code or the Daniel Code. And we have there the statement, it shall be for time, times, and an half. So if 59 is time, then 118 would be times, twice 59. And you can see that the twice time gave us the closing low of the March 2009 crash low. And I was running a tutorial, I think in Taupo at the time, that weekend, and we had a blue line target at 666, the devil's number, the number of the beast. If you're interested, go to the articles tab at the Daniel Code website. You can read a much fuller version of all of this that was written at the time. But we had that target number, we had blue line buy signals, we had TO3 buy signals, and I had about 20 people there who can verify what I'm telling you, that we call that low to the tick, or well, to the point anyway, a few ticks out. And what I'm showing you here is two sets of numbers. I'm showing you the fractalian number of nature of markets, that from the first push down, from this high down to this low, take that whole ratio, extend it from the next high at 1440, and you get 1, 1.5, 2, 2.5. Not bad. This is actually very, very close to the closing low of the crash. The blue line, the Daniel Code blue line at 666 is better, and they are very, very accurate. But you can have a bit of fun creating these other blue lines, which are really just estimates, if you like. But you know, they get some stunning results, as I'm going to show you, if you want to take an overview of the bigger period of charts. So time times, this is the crash cycle, and the crash cycle is 59 high to high on the first hop. Very, very specific, and you don't see it very often. But this has been proven to be strongest on the 6-day charts because it's more accurate. But let's move on, because Frank's given us an alert that it's showing up on the very long-term charts as well, and we're going to look at that. This is the updated 6-day chart, and we have a few things to look at here. This dark blue line going through the center is the median. The market's just about to reclaim that, very close to it. There's a Daniel Code blue line on the 6-day chart at 2255, which is not far away. And there's actually a 59 time cycle on the 6-day chart expiring next week. And these cycles are accurate to a period plus or minus 1 period. And that's because you can start the count at either a bar high low or the closing high. So if you move this starting point here back 1 period to get the closing high, you would have moved the bar back to now. So there's some reason to be concerned about equity markets now. Let's see what else we've got for you, and we'll put all this in perspective and tell you what you can expect next year. Let me just revert for a moment, because I've had a very interesting email here from Sven, my friend Sven. Peraboom, who's staying up very, very late. He's a European member of the Daniel Code, and what he's doing is he's talking about, let me just move this out of the way. He's talking about the commentary from the fourth seal, and what Frank said in regard to the DAX previous week was last week. We thought the DAX would reach the 59.3 retracement at 1088, turn again. A 59 cycle high is already active, pushing the DAX lower. There's another one coming in a few more days. Odds are we go lower. Any rally that unfolds here is counter trend. There's a lot of downside present in many of the other charts, suggests lower prices soon. And what Sven's asking is, this market's rallied like hell, and there is a TO3 sell signal. There's in fact a blue line signal, sell signal for the DAX for tomorrow. In fact, it's for today, tomorrow, and Monday. And there's also a TO3 sell for Friday. And this is the DAX chart here. Sven, the point of all of this is that the fourth seal, where Frank and I are analyzing 6, 12, and 24-day charts, that gives you overall trend pictures. But when you get down to the detail, it nearly always finishes by saying, follow the daily signals to get elected. And that's in fact what's happened here, that we had all of this wonderful excitement over Mr. Trump. This one came in a bit later. This is a bit of a delayed reaction, but for Friday, February the 2nd, we had a TO3 buy signal. And if you took that trade and you're still long, you can see that it's returned 15,500 US dollars, or a bit more, in 1, 2, 3, 4 trading days. The interesting thing to watch here, particularly Sven, is just look how perfect the target recognition is. If you don't have these Daniel Code numbers on your charts, folks, I don't know how you trade, and you're missing out on a great deal. The bar that the highlight is on now, that is Wednesday, December the 7th, and the high of that bar is 11086 against a Daniel Code number of 11087. That's 1 point away, 2 ticks away. That's like just nothing, zip. And today it's moved up. Remember again, target recognition is valid on the bar, high, low, or the close. And the market closed today at 11173.5. The close 11173.5 against the 11181.5. So you've already had this perfect target recognition on the bar before here, and this is what sets up the blue line trade. This is a standard blue line trade, folks. You have target recognition, a Daniel Code price level. That's the first thing at a blue line. The fast stochastic is overbought. The slow stochastic is overbought, and you've got divergence on our CCI momentum indicator. They're the 4 conditions we require to set up a blue line signal. Doesn't mean the market's going to turn. Once we've done all this analysis, we don't go selling these things at the high or selling them on limit at the blue lines. You'll come undone. We're never arrogant enough to think that we know what the market's going to do. Everything in Daniel Code trading is an if-then solution. In other words, what we're saying is, if we have the setup, which we do, then we put on our order. And that then becomes its own if-then, because for the order to be elected, it needs to go to the level at which the order is. And the sell order on this market is 2 ticks below today's low. Today's low is 10980. Now this thing works in half a point as a tick. So 10979 is the entry. And you can see that in the Daniel Code website. Go to the trade program. we set out exactly what the entry and exit points are. Okay, so let us move on now, if you're in that trade, 15,500 guys, wonderful, put a trailing stop on it. We've got sell signals for today and Monday and Tuesday. The blue line trades are valid for 3 days, and the TO3 for 2 days, so valid for Friday and Monday. Here's our compliance statement. So Sven, sorry I digress. The main point of all of this stuff is follow the daily signals. They'll get you into the trades. That's how you make the money. I guess nice $15,500 trade means you can happily pay the subscription for quite a while. It's good to have you with us. Let me know if you want more information. Anyone, folks, don't forget you can always email me a few days before these webinars. I'll be happy to look at any markets that you're interested in and talk about them at the webinars. This is our compliance statement, folks. A big risk in trading futures and Forex, especially if you don't know how to trade. Those of you who have done or are doing a tutorial, you're about to be inoculated from most of that risk, providing you pay attention and follow the signals. Okay, this was the 6-day signal, 6-day chart. We have a price there. We actually have a fourth seal line that looks like it's intersecting just a bit above 2255. We've got a median channel there, and we've got a contract rollover, folks. And those of you who follow these webinars will know that contract rollovers are prime times for change of trend. Go to the webinar called Power of the Options Writers. We see this so often, again and again and again. We get to a period of 2 to 5 days around contract rollover, and we see the start of a new trend. If this market is going to have a bit of a correction, it's a really good time to be doing it in the next few days. It's going to be hitting some very important targets. Now, let's have a look at where we're going to be next year. See if there's anything on the 12 for you. You've seen that. This is the most important chart now. This just looks like an absolute, hasn't changed for you yet. Let's see if it has changed now. You can see it. This looks like a dog's breakfast at the moment. Don't worry about that. It's because I've had to scrunch it up because we're going back to 1993 on this chart. As we move on, I'll unscrunch it and show you how to put on those estimated fractal lines. This here, this black line, folks, this is the start of a 59 cycle, and this is the really big cycle. This is a 24-day chart. In other words, every bar on this chart is 24 days. Now have a look at this. I know it's really hard to see. Right down here, which is August 1994, there's a high. It's almost impossible to see because the chart has just been exponentially dwarfed since then by these huge moves up into the dot-com bubble high, the 9/11 crash, rally back into 2007, and the 2007-2009 crash. And now the granddaddy of all rallies is what we're in at the moment. And that's dwarfed these markets so much that it's very, very hard to see. But August 2030 was a high. And if we run our cycle, this is the start of our cycle, and to here, this is 59. This is the Daniel code 59 cycle, and as you can see, I'll move it so you can see that is there. It was. This is where it was. That's the cycle high. That's the 2000 high, and the 59 on the 24-day chart went from high to high on the first hop into 2000. That's what creates the crash cycle or the death cycle. Doesn't mean markets even have to turn, but if you do get a significant turn there, you can expect to have a bigger move than usual. Now just watch what I'm doing here as we move this on. Okay, I've moved this on now. This is the 2007 high. Okay, look where it starts from. This is the start. This is a minor high, and then this is 59 to here. That's 1. This is 1.5. This is 2, and this is on the 2007 high. Okay, so that's not a crash cycle high because that's not on the first top. It must be 59 high to high, and here it is. Okay, this is a little high in here. Just move it off so you can see it. Okay, this is the high here. This is 1231. This is 0205 is the chart high. 1231 is the closing high before it. Let's put that back on the high. And there you are. This is the high. This is the closing high of the 2007 rally. Okay, this is the closing high. The next bar went higher but had a lower close. So this is giving you the closing high. If you wanted to, you can move it on to the next bar even, and that'll give you the chart high as well. Let's have a look what happened there. So both these last highs, 2000 and 2007, have both come on 59 cycles from fairly insignificant tops. Remember, it's not using this top, it's using a high before the high. Let's see what happens here. We've got a long way to move this, so bear with me. Okay, here we are. This here, now there are too many lines on here, but this high here, which is 03, get them on, 0504, that's the cycle high. 59 later on the 24-day chart, we're on it now. We're at it right now. This bar ends December the 15th. Excuse me, and these things are accurate to plus or minus 1 period. So the next period ends on 12:15. The next one's going to be 1:01. That's 12:15. Here it is, 01:18. So there's starting to be a number of reasons to expect a decent correction here. Let me move this stuff off now and show you how to do this fun stuff of creating your own numbers. Let's get rid of these time cycles. Here we are. We've actually got 2 59s right here on the 24-day chart. Scary. If we do get a correction here, it's going to be a problem. I don't think we will. I think we get a correction, that's all. But let's just see what the charts are all going to tell us now. I'll take these off, show you how I do them, because you can have lots of fun with this. It'll give you a much better overview of markets. Look where this correction came here, right down into the Daniel code, first retracement number. Perfect. Okay, so let's look first of all. We actually want to do this on the 6-day chart, I think is better. You can see more on that. Here's the 6-day chart. Let's go back to, here's all the exciting stuff. Here's the crash, 2007, 2009, and this is our crash slowdown here. Okay, so what you do, folks, the proposition here is that all market moves are fractals or a fraction of, they have a set mathematical relationship to every other move on the chart. The simplest ones to see are 1, 2, 3, or the half. Half, 1, 1.5, 2, 2.5, 3, 3.5. That's the basic starting point of all this Daniel code stuff, because of our basic rule that we start with from the book of Daniel, that he sware by him that liveth forever, that it shall be for time, times, and an half. Okay, now if you think that's kooky, don't worry about it, because I certainly did when I first saw it. But when you understand in depth how the Daniel Code's been created, and that it is a purely mathematical model, you won't think it's kooky. You'll think it's amazing and brilliant, because that's only a very small part of the story of what that whole sequence of the book of Daniel was about, which was time. Okay, so you can all have some fun with this. This is a standard tool from Trade Navigator. It's called Fibonacci extension, which is useless because fibs are merely approximates, but we're going to change the settings in it just to give you the 1 and the half. So in other words, whatever period you put this on will be time, even though we're putting it on price. Remember, time and price are the same thing on different axes. Now that's very hard to get your head around, but it's true, and we prove that all the time. So the first section out that you're going to put this on is going to give you time, and then you're going to be looking for times, that's multiples of that range, and half. Okay, so let's put this on. Here's the high, here's the first rundown, and we're going to extend it from here. And these are the ratios down. This is 1, this is equality. This is the same length as the first push down. This is 1.5. This is 2. This is 2.5. Not bad. This is the low, just before the low. This was March the 5th, 2009, and that low is at 677.93, 10 points away on a fairly crude tool. Let's do something else a little bit differently. Let's take that off, because we used this first swing down. Let's see what happens if you use this swing. Okay, same thing. This is the high, down to this swing, back up to here to extend it. Doesn't give you anything, okay? Don't panic. There's always two ways of looking at this. This is the chart low, but this bar before here, this is the closing low, okay? This is the chart low, this is the closing low. Let's put this cursor on again. High, closing low, up to the high. And now you've nailed it. 681.67. The close of this was 682.55, and the open of the next bar was 684. So that's how much fun you can have with long-term projections. Let's have a look how we got these ones up here. Let's bring all this stuff in so we can see what we're doing. I'll take off this time cycle. Let's scrunch this up a bit more. Okay, we're going to have to scrunch it up even more. And here we are. Okay, these are the Daniel Code numbers up here. We'll take them off. This is the 2009 low down here. Okay, this is the low bar. This is the bar of 0313. Now, on your charts, don't be surprised if they're slightly different, because all this Trade Navigator stuff you'll get once you start making 6, 12 or 24-day bars, you'll get slightly different numbers depending on when your data starts. So let's have a look at this. Let's do the same thing. This is just a shotgun way of forecasting future prices. There's the low. Okay, here's the first push out. This is the low. Project that up. Have a look at this. 211.693. That held it. Okay, not bad. Let's go to the next number, which is this one up here. This is the next swing out. Same thing we're going to do. Here's the low. This is it, 1344. This is 1370. That's a higher one, so I think we're on the right one. And now we can take this first one off, and you can see this was very, very good for getting the high. 2130.46. These highs are in here. I mean, it held it for 6 months. This first challenge in February 2015 all the way through here. These are all 2134, 213 something, 2124. Terrific stuff. But the other one, I'll put it back on. So you've got both from that to this high here and down to this low. These are your next sequence of numbers. We've broken through these now. We're now looking for 2393, followed by 2482. Now, bear in mind it's got to overcome. It's presently at resistance. This median here, which has been its target, has been trying to recover. That's resistance. They're Daniel code numbers there, and we don't be surprised to see some sort of a correction in the next few days now that we've had the close to the contract rollovers. Most of these equities markets are going to roll over on Monday or Tuesday. What happens after that? I think we only get an intermediate correction. I think, don't forget, we're also in the period of the Santa rally. S&P's got a marvelous record of going up from Christmas through to New Year, and the Santa rally you're in now. All very seasonally bullish, but I think we get a correction fairly shortly, nothing too drastic. And then I think this Trump enthusiasm continues through until at least January, and we'll get an idea then where we are. Now, if we're going to get to this number here, the probability of that is somewhere around April 2017. Okay, that's the target. What we're doing is we're saying 1 standard deviation from the mean. We expect it to run along the median, which is just about where it's got to now. It'll then accelerate to 1 standard deviation from the mean, and on this present trajectory, we expect that to be about March, April, around 2400. And I'll certainly be talking to you before then, folks, so we'll keep keeping you updated. That's it for the day. Thanks very much. Peter, sorry, I can't look at the NASDAQ now, but if you'd like to drop me an email, I'm happy to look at that or any other market. I don't have all the charts on this computer that I use for these webinars. They tend to be on a number of other computers, so I need a day or more just to pull them together and prepare them for you. But we're happy to have a really good long look at the NASDAQ. But what I can tell you about the NASDAQ is it too is rolling over early next week. And as of today, we have a TO3 sell signal for the NASDAQ valid for Friday and Monday. We have a blue line sell on the DAX, and we have a blue line sell on the Russell that I haven't posted. I posted the TO3 sell for the Russell valid Friday and Monday. The blue line sell would make it valid Friday, Monday, and Tuesday. And the reason it's not posted is because we have rollover. So I try not to post these signals that last 2 or 3 days around rollover, because it screws up the Daniel Code trade program that works by default off the 057, which doesn't roll over at the same time. So that's the only reason it's not there. But there are some blue line signals around, folks. So follow the signals. Make sure they be aware they don't mean anything until they're elected. All of these TO3 and plus signals, they're conditional until they're elected. Anyway, that's it for today, and thank you for being with us, folks. Peter Clark, thank you, and Merry Christmas to you too. We always say Happy Christmas, but I know that some people don't like that, some liberals. I guess you couldn't call me a liberal. My politics are slightly to the right of Genghis Khan, but there you are. So certainly Happy Christmas to all of you. It's the 8th now, and we'll get in another one just before Christmas, won't we, folks? 2 weeks, unless something dramatic happens. We'll have another webinar on the evening of Thursday the 22nd. Will be the Christmas special. We'll wrap it up with lots of interesting charts and what we're going to see in the new year. So thank you for being with us, Hugh. Glad you're picking it up. Keep at it. Janet, thank you. two Janets, both happy to have you with us. Great fun, Janet, as you say indeed too. Marshall, thank you. Thomas, Tommy Tomovic, yeah, thanks. Happy, healthy, all that, mate. And MSN. Thank you very much. Merry Christmas, Carlo, Tony, Michael. Oh, Michael Pell's back with us. G'day, Michael. You West Australia, or you back somewhere else in the world? He's a world traveller. Anyway, folks, thank you for being with us. Oh, Panama, great. Back you home. Thank you for being with us. Lovely to have you. I'll see you in 2 weeks, unless there's some drama. If there's some drama going to happen, I'll put on another webinar at short notice. That's what we usually do. So it's Friday morning down here. And one more day of trading to end the week. Thank you for your attendance. Look forward to talking to you all soon. Bye-bye.